Hello, hello, and welcome to April 15th. Alpha's Adobe at 188%. Well, yeah, 188%. There we are. We are at 1,075 profit against an ode of 1637. So let's bring up the numbers. Oh, there we are. 1637 minus 1,000. We're going to, that's the anticipation of us getting out if we get stopped out here tomorrow above below this line, which I'll explain very shortly. And that leaving an ode of 1637 in a perfect world. Of course, we know trading is not perfect, but we can always try to anticipate. With that said, let's go ahead and clear off that. We're going to do another calculation a little later. Let's bring up our data box. There's our data box right there, and here we are. So last bar high is less than the price is the exit. What that means is this: today's close was here. The close was at 523.25. It's right there, 523.25. And if the last bar high, so that's another mistake. Sorry, it's last bar close. Last bar close is less than price. We exit. Okay. So last bar close. So the close was here at 523 as we stated. Let's go ahead and bring that data box back up again. There it is. We'll pin it so we don't lose it this time. And then the bottom line is that close was 523. We then take off a small buffer, not much. I want to get out as much. I want to get out as close to this line as possible to try to get at least 1,000, and of course get out with a high ROI. As I said yesterday, any exits above 100 is considered a home run in options, and it's not encouraged by many teachers to be looking for 100 ROIs, but it happens. I'm not shooting for 100 ROI. I'm just shooting to get my money back on the losses. That's it. That's the objective here with loss leaders. Is loss leaders become winners. Just get back my losses. Whatever extra money gets dumped into the buying power up here in this corner, all the better. But ultimately is get all my money back from my losses. And that's a pretty penny for this account. This account at one time was an extremely large account, and then I moved some, doing some moving some money around. The losses stay with the account. They don't travel when the money gets taken out, so the account's still responsible, unfortunately, for the account, for the monies owed. All right, so that said, we now have our exit here, is that if we fall below, right there, if we fall below $23, 523, if we fall below 523 tomorrow, we're out of this trade. Now, I put this candle here. I drew this candle in earlier to show that this is the possibility that could happen. Why? Because we're very high on stochastics, and the RSI is still rising, which is a good sign. The RSI is the pressure behind stochastics. So it's sort of thinking it like the RSI is the wind behind the sail, and stochastics is the sail. So we're now tacking north, and the histogram looks okay, and so is the MACD value line. So possible chance we might be able to get a nice open. Now, if we get stopped out just even so tiny right here, that's okay. Because the bottom line is that it takes down more than 50% of the ode. Remember, the objective here is winning back our lost leaders to rebuild the buying power so that we can get off buying one contract and buy into many contracts. Now you see BioRim came in at 21%, and it has 4 contracts because the contracts are so inexpensive that we had enough to buy 4 contracts. But you can see normally we're still stuck in the 1 contract range. It takes a lot of work to get up there and eventually do that. So this account will be trading probably for a good year before it beats enough firepower to be able to knock off the remaining loss leaders. All right, so that's Adobe. And there's a review. There's our fourth rule. Now, if let's say by chance that this breaks 200 ROI, we just move it up. It'll still be the same rule. It'll still be the same rule. Or those who want can take the money right off the table when market opens. All right, that said, let's go on now to our next leader, and that's going to be KR. And KR had a good situation for today also, and that was this. KR had a dipper low right there. There's our dipper low, and notice that we did close above the third ratio, so our third ratio rule is in play for dip low exit. That's what it is right there, 36.72, and that's a 36.72 right there. So that's what our situation will be there. If this turns down, we'll get out, not with a lot of profit, but at least if rocks become pebbles, pebbles become profit, profit does pay back. All right, that takes us down to Capri, and Capri is here, and it has not reached the third ratio, so it's just mangling along. But this has a nice small, the 45-degree angle incline, nice and steady, doesn't doesn't rock the boat. That's good, and it's running at 22 now. BioRem is really interesting, and here's why. Watch this. Yes, I don't understand how a put. I have a put. The stock opens at 76, closes at $78, 76.72, virtually $2 move in the up direction. We have a put, and we're getting 21%. So I don't know. I'll just ride it. We got till July at 65 strike price to work this out, and it's a put, and you can see there the word put right there. But it is what it is, so we'll just accept it and keep on going. That takes us down to CBS, and at CBS it is a call, and it's starting to get a nice upward movement. This is the third ratio line. I put it here because this trade is so far back. It's like way over here, and we don't get to see when we get a little close up on the action on the candlesticks of the day. So that's what that is. Then here is that was CBS. Our last positive is AT&T, and there is AT&T. And AT&T is a call. So remember, our entry was down here, so we still got some positives. We didn't. This is the one that got close to the third ratio. It got a high of 31.15 here. It got a close here at 30.98, and it was still like pennies away to get that close above the third ratio to initiate. But we stick to the rules. We are risking $1 to make 2 or make 3, and you can see that in the laws of probability, we are in the right ballpark. 188% against our deepest of our CL put at 58%. All right, let's now also look at this. The account hit 6999. That's why I want to bring this up now. And so 699 minus the 5533 comes out to 1468. Divide that by the 5533 is the benchmark of July 1st, or January 1st, and the percentage return is 26.5%. The account is 26.5%. Where is the S&P? 10.7. 10.7. So with that closing, there we are. The alpha stochastic strategy is at 26.5 for year to date against the SPY of 10.7. And with that, we thank you very much for stopping by and checking it out.